GoldArc Resources ASX code GA8 is our first presenter. GoldArc is founded, has focused on his advancing Leonora Gold Project portfolio in West Australia, progressing from exploration success towards future development opportunities. Today's presentation will highlight recent achievement, key project milestones, the company's strategy will unlock future value and move into the next phase of growth. Our presenter is Mr. Paul Stevens, Managing Director for GoldArc Resources. Mr. Stevens is a highly experienced mining executive with extensive expertise across exploration, project development, and mining operations. Prior to joining GoldArc Resources, he held several executive and board positions with ASX and the London-listed companies. As co-founder and executive director and Crusader Resources, he played a key role in developing the Pau iron ore mine in Brazil and helped define more than 2.6 million ounces gold resources. With a strong background in both mining and finance, Mr. Stevens brings valued technology and commercial expertise to the company. The presentation today is titled The Next Chapter in Leonora Gold, where discovery meets development. Enjoy watching.
We've got 1,200 square kilometres of ground around Leonora that we've been collecting for the last sort of 12 to 18 months. We've actually got too much tenure. A big part of our process is to go through it and see how we can reduce those overhead holding costs. And you'll get a bit of an idea. As a small company, we're alongside some of the biggest companies and the biggest producers. And what we need to do is maintain our holding costs and maintain our business acumen, I guess. But so where we are, we're around Leonora. We'll go a little bit more into our neighbours and the people who are around us and what we're doing. But we start out with 200,000 ounces in proven JORC. There's a bit more of that isn't qualified as JORC, and we are working very hard to increase that. We're a very active junior explorer. Up until 30th of June this year, we will have completed 75,000 metres of drilling. You'll get a bit of a sense of where that's going and the results that that's going to generate. But when you do that much work, you generate news. And anyone that wants to go and look at our announcements over the last 3 to 4 months, they'll see that we've very, very consistently delivered not just consistent drill results, but exceptionally good, high-grade, broad drilling results. And it's a function of doing the work. When you're a junior and you go out and try and generate news for investors, and you're limited to a budget and you're limited to maybe a 2,000 or 3,000 metre drill program, there's only so much you can create. There's only so much you can generate. 75,000 metres generates an enormous amount of news flow. Okay, so as an investment, and we'll talk a little bit about the last 6 months and where I think the next 6 months will take us, but right now we're circa a $40 to $50 million company. We've got $6.5 million in the bank, and more importantly, we've got an exceptional team. Now, our team has got a real DNA based in the company called Gold Road. Gold Road was taken over by Goldfields earlier in the year. Very large discovery by Ziggy Lubinecki. All of our geologists have spent time at Gold Road. Both Austin, our senior geologist, and Sophie, our junior geologist, are people that were trained up by Gold Road and became redundant and became available to companies like us because of that takeover. So 3 geologists, very good CFO. He's going to have his hands very full, as you'll see. We're quite unique. We are going into production in the next 3 months. We will be generating a revenue. Okay, so starting out with the last 6 months from December. And I'm sure a lot of you look at the junior sector and companies that are capped in that $30 to $40 to $50 million zone. I hate this chart because it's going sideways. We've been range bound. We've traded between 6 and 8 cents for the last 6 months. Okay, in that time period, we've done an enormous amount of good work. And what that good work has done is it's held us steady. So whilst a lot of our peers have fallen away and been forced to do capital raising at discounted prices, you know, last year we were trading at 2 cents. We just raised $7.3 million at 7 cents. So so what we've done there is we've shown that we can not only create growth, we can not do discounted capital raising. That's a big part of this company. We won't dilute you. And as you'll see from some of the coming slides, we really won't dilute you. Okay, talked about our neighbours. So we're represented in gold here, 1,200 square kilometres. The tenure in brown, and I'm not sure I've got a pointer, the tenure in brown to the north is Vault Minerals, just merged with Regis to create a $16 billion company, production asset at King of the Hills. The blue tenure is Genesis, so that's an $8 billion company. Again, very, very big producer. You can see the proximity, we're right on their boundaries, and we've got an awful lot of work to do. One of the things that we're probably different, and I really make a point of this, is we are focused. We are gold only, and we won't change that. If you want to invest in GoldArc, you're buying an exposure to gold. We're not going to run off and do rare earths. We've got a rare earth deposit on our land. We're not even going to touch it. We've got lithium. We've got nickel targets. We're not doing any of those. We are a gold company, and we're sticking to our guns on that. So this is the next 6 months. I talked about the last 6 months, and I will try and keep this moving along, Stu. So the top column you can see there, or the top line, is our pathway to production. What we've done is recognise that we're very good explorers. We've got the great Ziggy Lubinecki on board. We know how to find new deposits, and we've got the right tenure. But we've got to keep ourselves funded. We've got to not do dilutive capital raisings. We also recognise that we're not miners. We don't know how to go mining. We don't know how to build a team of engineers and truck drivers and excavator drivers. So we've done a partnership with a group out of Kalgoorlie that have been operating. They've been operating as geological consultants for over 30 years. They've been doing mining deals underneath the majors for over 10 years. A company called BML, we've signed a partnership with them. BML have got access to mills. They've been doing about 400,000 tonnes very quietly, very privately out of Kalgoorlie for the last 5 or 10 years. So they know how to do this. They know how to do deals with the mills. They've got their own mining fleet. They come in and totally fund our operations. So once we have a project that is sufficiently advanced to be able to go mining, our mining partner takes it over and funds it. So right now, they're funding about $3 million worth of drilling on our ground to take the Mount Sterling project into production with a target of August, September of this year. And we don't have to do any of that. The deal is they come along with their balance sheet. They fund everything. They've got 90 employees. They've got 3 mining fleets. They'll bring all their gear to site. They've already built the transportable mining camp. They've got graders out on site now. We'll start to see equipment roll up in the next couple of weeks. It's a really exciting time for that top column going across there. But the great news is, for shareholders in GoldArc, that's not going to send us broke. That's not going to put us in a position where we need to go and get $20 million worth of debt or do a big equity raise. It's fully funded to production, and exciting times for that. In the middle of the presentation there, or in the middle of the chart, you'll see that we've also got projects, and we'll talk a little bit more about this, that are known resources, but they're not sufficiently advanced to go mining. They need more work. So that's where we spend our money, $6.5 million split across projects that are known resources, again, very focused on Leonora only. We're not going outside of Leonora, we're not going outside of gold. That's what we're doing. And then over our area, you saw 1,200 square kilometres. We've got an enormous amount of ground that has never been touched, never been looked at. And that's why Ziggy Lubinecki is on board with us. Ziggy's quite honestly not all that interested. And you see that same representation here in the middle of the 7 projects that have got resources on them that are small and need more work to be done to get them to mining status. We've got Mount Sterling that is at mining status. That will be mining in the next 3 months. Could be the next 3 weeks. See how we go. We're at the final. What we have to do to get Mount Sterling going is we're waiting on the final mine closure plan to be approved. That's been with the department for over 6 weeks now. It's imminent. And I think that'll be a big re-rating event for us as a company. In the middle in the orange are projects that have got resources that range from 5,000 to 10,000 ounces to sort of 40,000 to 50,000 ounces. They're not big enough to be standalone. They all need more drilling. And you'll see we've been getting some exceptional results out of moving those from you know, an inferred or an imagined or just a lower standard of resource to something you can actually say, yes, I can go and make some money out of that. And at the bottom, you've got what really brought Ziggy onto the table, which is areas, and you've seen a couple of the previous presentations where Ziggy's not interested in finding 200, 300, 400,000 ounces. The last deposit that he found is 8 million ounces at Gold Road. Right? It's one of the biggest discoveries in WA. He's keen to do it again. He knows how to do it. He's got the team to support him. And frankly, we're all very excited about the ability to take something out of the grassroots sector and actually have a major discovery on it. I'm going to speed this up because we all want to go and have the complimentary drinks. This is a blow-up of our northern area. Only 2 or 3 kilometres to the east is the Vault Minerals King of the Hill mill. It's now at 8 million tonnes per annum. It's an enormous beast of a mill. All of that ground around it has had very, very little modern drilling done on it at all. It's quite amazing when you go out into the Leonoras, the Lavertons, the Walloonas, and realise how much of Western Australia hasn't actually been explored. So I mentioned it quickly, and you can please come to our booth and have a chat about it. But not only have BML completely funded our operations, but prior to doing our capital raising, they provided us with a $2.5 million prepayment of future profits, which is effectively a loan. It's basically saying, if you guys need money, we're going to make a bunch of money in 3 to 6 to 12 months. We're happy to give you an advance. So we've got a $2.5 million facility there. I call it the credit card. We don't need to touch it. We've got $6.5 million in the bank. But if for whatever reason we ran out of funding, and I can't think of a good reason, and we needed to come back to the market, we're not going to do it. We're not going to dilute you. Right? I'll use the credit card if I have to, but $6.5 million, I can't imagine why we would. Okay, look at some pretty nice results here. This is what happens when you do 34,000 metres of infill drilling to grade control. So you look at a result like the top one there or the bottom one, you know, the top two, 18 metres at, you know, over 5 grams. But look at the depth. It's from a metre. There's no overburden on this. Right, so there's no cost of stripping it back at the top. This is why the BML guys are so excited about it. You've got big, broad intersections of hugely economic grade. Now, this resource, JORC resource, has an average grade of 1.7 grams. That was when you drill it at 40-metre intersections. These drill holes are at 6-metre intersections, so they're hugely more confident. But if you have a look through that, I don't see a whole lot of 1.7 average in there. So what we'd highly like to see is a positive correlation to what was expected to be the grade to what is the grade that we actually go and pick it up and mine it. It's pretty exciting times. Exploration upside on the project. I need a better diagram. The purple representation is the 1.3 kilometre long pit that we're about to drill. All of the other polygons are very high grade soil anomalies that have had zero drilling done into them. And you can see some of these soil anomalies have had 50 gram, 11 gram rock chips on them. These haven't been drilled and they're right next door to what we're about to mine. So whilst the BML guys are going mining, in August we'll have a drill rig on this looking to expand the resources, looking to turn that 150,000 ounces into something bigger. How much bigger? Well, we're going to find out. I want to sort of, and I am going to bring this to a sort of shorter end. We've been having a lot of success with the drill rig. Last year we drilled a new discovery called Eclipse. Again, really shallow intersections. We got 14 metres at 7.5 grams. That's from 12 metres depth, right? So we've got really shallow, really high grade, good exploration ground. And I just wanted to touch on our, so this is our third project. Second project. The first one is Mount Sterling. Mount Sterling has actually got a second pit next to it called Sterling Well, so it'll end up being at least 2 pits. I think it'll end up being 3 or 4 and they may join together, but let's see how we go with it. You know, the idea is to get into the mining and get going. Look at the results from Sapphire. This is from 3 weeks ago. So down at 100 metres down hole, so roughly sort of 60, 70 metres vertical, we've got a hit there going 8 metres at 66 grams. You know, with a metre at 363 grams in it. That's mineable. That's going to be a mine. Okay, how big is it? What does it look like? Again, I talked about that pyramid where I said we've got a whole bunch of these resources. These resources on the page here are all numbers that are current from those projects that are not advanced enough because they haven't had enough work done on them to be able to say, we know what this looks like, we know what we're going to do, we know we're going to mine these. But I can tell you with a fair degree of certainty that the feasibility study work we're doing now, specifically on Sapphire and Eclipse, it's very hard to see these things not being mined. We haven't done any work at all on the underground potential of these deposits. You can see in the slide here at the top, there was a pit dug on this back in the sort of early 90s. It only goes down about 15 or 20 metres and you can see the outline of it missing the actual ore body. We've drilled out 8 metres at 66 grams in there. Below that, there's a hole that was drilled in the early 90s that went 7 metres at 142, including a metre at 979 grams. Now, when you see numbers like that, and they were drilled in the 90s, the truth of it is you can't trust it. You don't know where the hole was. You haven't got really accurate coordinates on it. You don't know that it's there. But when you drill above it and get 8 metres at 66, including one at 363, it starts to make you think that it could be real. And they're underground grades. So at the moment, we don't have underground capacity. That's something we want to build into. But at the end of the day, I think we should go and put a pit on this first and make some money out of it.